Very excited to have C21's Bruce McDonald on. We're going to be talking about C21, of course, as well as sort of the state of the cannabis market right now, what's going on, what could be coming, a whole bunch of stuff. But if you guys have any questions out there, as usual, feel free to put them in the chat. We take them on every platform except for Twitter still. StreamYard still does not allow for Twitter questions, which is very unfortunate because I feel like so many people stream from Twitter. But everybody knows how to get in there. And we got Steve in here, Noah in there. Great, nice, love it. All right, well, Bruce, maybe we'll kick it off. I feel like the way that most people want to. I feel like some people are familiar with you. People are definitely familiar with C21. It's in the MSOS ETF. But a little bit of your background, who you are, how you got to C21, all of that.
Thanks, Mackenzie. I'm excited to be here. I guess, how did I get here? My background was 37 years at RBC. I did a wide variety of roles on the cap market side, ending up as I retired as sort of an EVP of the bank. My focus was mainly around building new businesses, trading businesses and such. And it took me to New York. It took me to the Bahamas. It was fun times. So when I retired, I actually made a investment in C21 just before it found the board. And when I was interviewing management, they asked me to join the board, and it evolved. And here we are. And now I'm chairing it. We've been through some tumultuous times, but happy where we are now.
That is true. I will say you've been through some tough stuff. I will say also, in addition to tackling cannabis space, which can be very trying, a little bit tough, I was stalking your Twitter earlier and I saw maybe that you had done the Ironman in Canada. Is that true?
Oh God, no. No,
Pre-pandemic?
I,
No?
I did the Olympics if you want to go there, but
Oh,
that was in sailing, but no
oh,
Ironman for this guy.
okay. I thought it was something, I don't know, some sort of biking thing. Maybe not. All right. Well, fair enough. Sailing it is. Apparently sailing cannabis is a big thing. We have Morgan Paxia from PSDN who also sails. So who knew? All right. Well, maybe let's talk a little bit about C21. What's going on there? I feel like just for anybody who's new, kind of giving the elevator pitch of what it is, why you're excited
Oh,
about it.
yeah, for a simple level set, I'd say is, I mean, we are, I guess, would be classed in the tier 3 camp,
Mhm,
with a smaller company, but a company we're very proud of. I mean,
mhm,
we generate solid gross margins in the 50s. We've managed to deliver 12 quarters of positive cash flow, do about 12.5 million in EBITDA. 10 million of that makes it to operating income. And not a lot of people get to say, but from an earnings perspective, we're generating 5 cents roughly of cash earnings. I mean, there's
mhm.
always derivative math in earnings. So, but when you strip it away, about 5 cents, which is about a 5 times trailing PE. So we are cheap, but I mean, I think, Mackenzie, one of the things I'd say is, positive cash flow in this industry. If you go back a year, there were 10 players,
Mhm.
of which we're one. Now there's 5 players. It's becoming an interesting business.
Yeah, it's definitely tightening up a little bit, which is exciting. But maybe can we talk a little bit about, I know you mentioned the tier 3, which I feel like I feel like moving beyond the tiers a little bit, but we're still kind of labeling things that way. Can you talk a little bit about operating kind of in that tier system on the smaller side? What allows you to stick it through and basically be part of that tighter, pack that survives through?
I think the difference between TIERS and TEARS is running a solid business, and I mean, we borrowed our operating philosophy from Clayton Christensen, one of the great American economists, and it was be impatient for profits and patience for growth. And
Hmm.
I think that has been really, the factor that we have followed. And there's been a lot going on behind the scenes as we've tried to bolt things on and do smart things. But at the end of the
Mhm,
day, it's got to be right. And sometimes they get away from you, and sometimes they just don't look right. So
mhm.
I think regardless of your size, it's about delivering a bottom line, and it's the bottom half of the income statement. that ultimately is going to keep the decisions in your hands rather than desperation.
Yeah, very true. And I guess applies all across the tiers and to every company in general, as well as all cannabis companies, which is very fair. Yes.
Mackenzie, I think I'd say, whether you were tier 1, 2, or 3, it really determined how much you could leverage your balance sheet
That's fair.
in sort of the go of the last year.
Mhm.
We've actually been deleveraging our balance sheet. If you would
Hmm.
go back 18 months ago, we had 20 million of debt. Now we have about 4 million. So, but I think you've got to service that leverage. And with the squeeze in the margins, it's tricky.
It has been tough. It has been exciting and interesting for sure. All right. Well, maybe let's check in a little bit deeper into sort of the markets, in the US, because obviously you're focused in the US. Maybe Nevada would be one to focus in on. Why Nevada, for one? I also want to know, how is it different from its neighbor to the west, I guess, California, which I hear a lot about. So tell us about Nevada or Nevada.
Limited license is words on this show that you hear a lot,
Mhm.
and Nevada is a limited license state. The benefit of it, they've about 100 licenses total. I think from a retail location perspective,
Mhm.
um, it gives you the natural moat and keeps the price pressure sort of balanced.
Mhm.
That said, Nevada is an interesting state in that it is really indexed to tourism. I mean, we market to locals,
Mhm.
and we have a 500,000, transactions a year that we do,
Mhm.
and but even the locals are tied to tourism. So the discretionary money, maps to that. And in this economy, Nevada's had a bit of a squeeze. We've been squeezed less than the state overall.
Mhm.
And we've just been maneuvering to make sure we're still delivering a bottom line.
Yeah, that's fantastic. How does it compare in terms of, we hear a lot about California being complicated because of the illicit market there. What's that like in Nevada? Is that kind of a little more immune, a little more protected, but or not
A
as much?
little bit protected, but it's still a pretty close drive to California. So,
Mhm.
Croptober shows up in the Nevada markets.
Mhm.
Uh, but I would say it's absolutely less of a problem. Nevada
Mhm.
is a relatively well-regulated state,
Mhm.
but California is just too geographically close to say that, what are they going
Nothing
to do
gets
with their
through.
$100 pounds? They're going to drive them. So.
Yeah, that's fair. Well, anything that you guys are doing, I guess, not to address it in terms of, fighting it or anything like that, but is it just sort of building a brand and really trying to get, build that base, build that brand recognition? What's the sort of counter to it a little bit?
So we are the two dispensaries that we run in Nevada. We operate under the Silver State brand,
Mhm.
and we have definitely focused on customer loyalty.
Mhm.
We've done that from day one, from being a price point leader on product and a variety leader with about 700 SKUs in store. So, our focus was be convenient.
Mhm.
We made sure our dispensaries were located well,
Mhm.
with great parking, light, and convenience and safety. And I mean, that has really been the pay for us on a loyal repeat customer base. But you're right, you need to ultimately own your customer, and we feel pretty good in that camp.
That's fair. How would something like, I think there's been a lot of attention turned fairly to regulation and what could possibly change. It seems like people are trying to kind of solve the cannabis solution in a lot of different ways, safe, whatever. How would something like interstate commerce affect, Nevada? Is that, how would that affect it?
It might morph how you approach sort of the sourcing side. I mean, we are vertically integrated. We have 100,000 foot warehouse. About 40,000 of that is currently structurally built out. So
Mhm.
we're generating about 8,000 pounds of high grade flower for ourselves.
Mhm.
We sell roughly half of that through our own store structures,
Mhm.
and the other half we sell into wholesale markets, and which in Nevada is a bit of a unique beast. And it really was meant to be forward capacity for retail expansion.
Yeah, that's fair. Well, any sort of take again, kind of turning back to the regulation and what potentially might be coming. Any thoughts on where we're standing, and then also maybe any takeaways from Canada, just because I feel like you're so
I,
close to.
well, I don't think Canada got a lot right.
Oh,
So, I mean, call that a takeaway, or I'll
sure,
leave it there.
sure.
I think the cultivation tax is probably the toughest dimension that we're seeing I mean, Nevada's been a slow mover in
Hmm.
realigning. It was supposed to be a 15% tax, but
Hmm.
prices have gone down 40%. The tax is still where it was.
Yeah.
I mean, I don't think there will be a standalone wholesale Nevada operation left standing, because I think the game is too tough
Hmm.
in the current operating regimen married with the tax regimen.
Hmm.
But my favorite, darkest before the dawn. We're not dependent on wholesale, but we can benefit from wholesale.
Hmm.
But we need the market to clean out a bit for us really to get the leverage that's, I think, coming down the road for us on that.
Yeah. So just positioning yourself best for what potentially is coming down the pipe. That makes sense. Um, I also would want to check in on your thoughts. I feel like it was a few weeks ago or something like that. The CSE's guidance on naked short selling, because I feel like that's a sweet spot. Do you have any thoughts?
Well, yeah, I mean, I spend a lot of time in the technical aspects. I grew up in the technical aspects of trading,
Hmm.
and
Yeah.
am still there. And it's actually the IROC regulation that came out, which is the equivalent to the U.S. Reg Show rules on that you need to pre-locate a short ahead of being able to short.
Hmm.
I think it'll get rid of some of what I would call the semi-egregious practices of people taking down private placements and just selling stock, even though they're restricted and they can't deliver, but eventually they can.
Hmm.
So it's like some of those dynamics, I think, will change. One of the things, I was recently asked to join the OSC's CEO Advisory Council. And one of the reasons I was passionate to do that is I think the real challenge we have in the markets isn't the ability for people to short. I mean, it's a two-way street out there, and that particular reg isn't going to change. It'll change, like I said, it'll change the abuse around private placements, but it won't change the ability for people to short. I think what we've really got to look at is short selling rules themselves. And you go back in the good old days when it was an uptick rule versus the number of 359, 59 prints you see where people are banging stuff out, and you feel like they're playing short positions. So my hope really is to have a broader view of the actual short sell rules themselves in the market, because there's too many algorithmic strategies to just say you make more money shorting stocks than buying them, and they make it so, uh, in my words, a bit of a manipulative way.
Could be. Do you have any thoughts on, more retail players in the market, probably more interested in things like cannabis, whatever, how that kind of plays into shorting, anything like that? Any thoughts there?
We're a
Not
pretty
really.
beat up sector right now,
Yeah.
and we lived. I mean, retail to me doesn't look at the right dynamics of a marketplace. I mean, the
Mhm.
thing we really need to get to, and hopefully safe is a first step, but we need to get the institutional investor in to
Yeah.
be able to recognize and distinguish value. I mean,
Mhm.
MSOS has been the boon to allow capital into this sector, and thankful that it has.
Mhm.
But it tends to make all the stocks trade as one. We all go up, we all go down, and there isn't the smart money in that's really able to distinguish the value, and retail just doesn't get you there. So I think retail is exhausted in our sector, and what we really need. I mean, this sector in general, I'd say, is capital starved. Um,
Mm.
so as we go into that again, you're going to need the institutional channel,
Mm.
because you know
Yeah,
there's
provides that
only
sort
so
of
many ways to
stability
grow.
as
Yeah.
well, which is a key thing. Do you know how, or not how, obviously, if you could solve it, it would be solved already, but do you know how you sort of get those institutions more comfortable, sort of, because it's a tough sell right now, I feel like, just given where we've been. But again, seems like a lot of promise coming up. But what's your take in terms of how to get that done?
Well, I mean, fundamentals aside, I think there's structural elements in the market that we have to solve, right? I mean, we've heard lots about the custody piece and getting that element working and just more the broad, acceptance of cannabis in portfolios. I think the fundamentals will ultimately take care of themselves. There are clearly investable companies in this sector, and I think there's still a lot of interest. It's just waiting.
Yep. Okay, fair enough. Okay, so I'm seeing some questions come in, which is great. So I think we'll get to them shortly. I did want to ask a little bit in terms of the broader macro environment, how that affects cannabis. I think, we had a tough time during COVID, but that ultimately benefited cannabis because everybody was stuck inside, nothing else to do, sort of thing, and had discretionary money to spend on things like cannabis. But we find ourselves in a very different position today where things are more expensive. Market seems to be, ripping down recently, especially with, more focusing on inflation and what the Fed in the US is going to do. Um, can you talk about, how companies as a sector, I guess, or not how companies, how the sector can sort of navigate this, and then the company individually within it, best way to kind of get through?
I mean, sure. I mean, I think growth is ultimately, what the game's about,
Mhm.
and we need to channel to growth. But you're right, we're not going to be immune to the dynamics of going from a free money world where money was free and being handed out to an inflation world with discretionary capital going down. I think one of the things that's going to be interesting to see, and the real success in the sector, is going to be the broadening of adoption of cannabis. And I stare at we had 500,000, maybe 600,000 clients a year coming in the busy times, and we're at 500,000 now. What would it take to make that a million, and how does it become a more broadly accepted consumable?
Mhm.
So can you grow your market? It's going to be more than just marketing. It's going to be time and acceptance. So I think the dynamics are good for that in the sector.
Mhm.
That the trend should be you know our friend on that. But we're if we're just counting on easy money to spend more, I don't think it happens. And then and as the market slowed down, we've had price compression, so we have revenue compression, et cetera, et cetera.
Yeah.
I think, but to your question of how do you how do you grow in a dynamic like that? When you
Mhm.
really sort of rip the world apart, there's sort of four ways to grow, right? I mean, there's equity markets. That's effectively closed to our sector right now. Debt markets. That again is getting more expensive with
Sure.
the rate environment that's going on.
Yeah.
I think we're seeing tier ones looking like 13s and 14s now. So, money's getting more expensive there.
Mhm.
One of the things that I always laugh when I or cry when I
Oh, no.
read people
Go ahead.
talking about us, right? I mean, I mean, one of the big bonuses of having, income is we've always had access to the debt markets, and I feel
Mhm.
we still have access to debt markets. It's just if you're playing in the mid-teens, you better know what you're doing is a smart thing because you're paying a real price for it. But I mean, beyond the equity and debt markets, and so they're both kind of awkward approaches. I think M&A uh, is sort of going to be the channel we see activity in. I think
Mhm.
right now, if you look at it, there's a lot of very well-run privates out there that
Mm.
you know look a lot like us. They make money. They've had to make money because it's their
Mhm.
money,
Mhm.
and they still have an interest in finding their way to the public markets. I always look at C21 as the world's best SPAC. Uh, we're
Mm.
not just, I mean, we're an operator that makes money in their sector, and we're listed, and we've gone through all the headaches of that process. So we spend a lot of time talking to um, not the, I think I'll just buy your dispensary type, but
Yeah.
real operators where it fits. I mean, the beyond that, that fourth dimension would be organic growth, and we've really focused on that in having doubled our grow footprint and walking us into the wholesale side and capacity has been sort of the approach we've taken in that. But it's staring at those four levers and not doing something stupid.
That's honestly, that is always the goal. Not to mess up is a key part. Not losing money is a big part of investing. All right, let's maybe turn to a few of these questions. I just want to get to them. Let's see. All right, from La Paluca. Is acquiring dispensaries something that is being worked on actively?
So the answer to that is yes. But I think when you stare at it, there's two sides to a limited license state. There's limited licenses to acquire, and the MSOs have a good chunk of Nevada currently, but there
Mhm.
still are some interesting ones out there. We all know valuations have sort of adjusted downward, and in the conversations with people, no one wants to think of their baby as ugly, but you've got to rationalize value. So we continue to toe in the water, have conversations. We got really close on some. We had the right price, we had the right terms, and some of our friends got it instead of us, which was disappointing. But no, there's not a day that goes by that we don't try and figure out how to move something. But again, within the terms of the reality of valuation.
Yeah, that is perfect. All right, next from Jimmy. Question for you. The company stated a goal to grow 100 million, yet revenue has decreased. Can you elaborate on how the company will meet stated revenue objective?
Um, Jimmy, we're going to keep trying. I mean, if you look at when we made that statement, wholesale flower was trading at 2,400. When we looked at the capacity increase, the 100 million basically represented the build out that we had targeted on the wholesale plus one more dispensary. The dynamics have changed in the market. We're seeing uh, distressed sales in flower by others
Mhm.
down in the sub 1,000 category, and the real market being more in the 1,000 to 1,200 range. So it's changed the dynamic, but number aside, and we can. I mean, my view would be, as I said earlier, I think we're going to see some of the wholesale only players squeezed out. In fact, if you look at when Trulieve brought the Harvest assets on, they actually closed Harvest's wholesale operation
Mm.
in Nevada. So I think the market's going to rationalize. I think price point we're going to see come up from the desperation distress pricing into more equilibrium pricing. So I mean, part of it's there. It's part of the reason we took a pause in the build out of our wholesale stuff, which is we didn't need more product in a shallow market. But I mean, to achieve it, we need to make those dispensary acquisitions. There's lots of other stuff that would be more seismic. If you ended up merging with a like player or one
Mhm.
of these privates I talked about, it gets you there. But that's not what we meant when we said it. When we said it, we saw an organic path to getting there,
Mhm.
and pricing has made that hitting that number tougher. But we keep going.
Yeah, that's fair enough. All right, from Jane. Oops. Do you think C21 would prefer to remain a standalone operator? Would you like to see it acquired by the right suitor? M&A can wreak havoc on good balance sheets during integration, which is important. That marriage can be tough sometimes.
Well, Jane's right on that. I mean, one of the things we
Oh,
like
great.
about us is we're very very clean. We have spent the last 18 months cleaning up the Oregon, uh,
Yeah.
you know, errors in direction.
Hmm.
So I'm not worried about how hard it is to merge, but I do think. And so the answer is, do we want to go it on our own? No, that's not a long-term logical path. But I think one of the things that we have worked hard to be is one of the few tier threes to actually get to be in the driver's seat on which way we go. And there's lots of, and it's not just tier three, I think it's a tier two statement too. There's people out there that don't see the path forward, and they're going to get told. because we're still making money, we get to decide the when and the where. And there's a lot of really nice dance partners out there. And we hope we get to terms with like-minded people, because we do think our model is the one that ultimately survives in the industry, albeit I'd rather have another zero in revenues, another zero in profits.
Sure. Yeah. Well, that makes sense. And it definitely ties into your position of not wanting to do something out of desperation, but really choosing your opportunities, which makes sense. You did also mention Oregon. So I did really quickly want to touch on that. Again, getting out of a market that you want to find, that you don't find as much opportunity in, to really place all your attention on where you find the best opportunities. Can you talk very quickly about, getting out of Oregon and why, you don't see it as a good option?
Well, yeah, Oregon, I mean, you hate admitting you're wrong,
That's okay.
but
You got
we
it.
were wrong.
That's fine.
As a
That's
as,
cool.
and by the way, it wasn't Sonny's desire to get into Oregon. He married into Oregon,
Ah,
but
well,
when we started off saying we can optimize this business and make it cost efficient and we can deliver. But what we found in Oregon was, for all the effort we were putting in and all the efficiencies we were generating, the price was going down at least as fast as as we could optimize. And it got to the point where you just said putting capital in this market is just good after bad. And it just, what we can do with $20 million in Nevada was worth so much more to us than 20 million down a hole into Oregon. It's just a tough state. You've got, black market, almost cartel based stuff going on in
well,
some parts. Um, and it's not limited license. So, I mean, some of the private guys, I think, that have big retail footprints are doing all right in Oregon,
mhm.
but that doesn't fit in a public markets. I mean, that style of operation. So yeah, no, we made the hard decision to discontinue Oregon operations, but I think it's in the shareholders' interest,
Yeah.
and we're focused on the stuff that makes money.
That's great. Again, finding the best opportunities totally makes sense. And, nobody's going to get every single little decision right, but I think finding that, identifying it, and quickly turning away from it is what counts, and a key thing for long term success. All right, let's see. El Guapo kind of stole one of my questions a little bit, but he's great. He said, "What does C21 do better than other MSOs? How can C21 help serve multiple cannabis companies? And then where could it be in 2 to 5 years?"
I think so. What we do well is cost management. And, with SG&A running at 20% of revenues, even as revenues have declined somewhat, we have worked hard to say we know how to run a business. That's something that is maybe hard to share. I think when I think about sharing, I think it'll be interesting to see how the brand stuff evolves. Should we be like, our wholesale operation is very effective. Cost of goods sold is a bit of a trending thing, but we're targeting to get that down into the low 400s a pound, and feel like we're kind of there on at least a capacity number. But I think the concept of, if you will, crop sharing with some of the other brands
Mhm.
inside our facility, we've got space. We already pay for, the lights,
Yeah.
the heat,
Yeah.
the water. So
Mhm.
that is still a scalable asset, even if it isn't that we need twice as much. But so I think that's something where we could share with others. And other than that, it would be technical expertise. If we were partnered and merged with someone, it would be around how do you run a business. I mean, what we're proudest of is the bottom half of the income statement. You need one of those.
Sure, that is very fair. All right, next up, and maybe last up, from Steve. A lot of different SKUs. What are a couple of your best
Mm.
sellers? Any favorite? Pick a favorite
Steve,
child.
you Steve, you've taken me out of my comfort zone on that
Oh,
question. I've seen the tables. We do about 50% of our volume with house brand, Phantom brand, that we actually took from our Oregon. The one thing we got from Oregon were some good, longstanding some brands,
oh,
but they said half our volume is our own product. But when you get into the comparisons, especially being stuck on the north side of the border for the last 2 years, I don't have that specific answer for you. So apologies.
That is all good. No worries. All right. Well, I think final question, kind of just looking ahead, I feel like it has been a tough time, maybe some stuff ahead. We'll see. But what has you kind of, holding on hope, excited, coming up in the space, in cannabis in general?
I think rationalization in the market is going to be good for us. And I think it will, I mean, people start off, saying, I will delever by selling the assets I don't want. I think people will end up having to delever by selling the assets they do want, because those are
I
the only
know.
ones that really have a bid.
Yeah.
And our job is to stay close to capital that wants that foray into good assets.
Mhm.
I go back to the words, we're one of the few that's in the driver's seat to make decisions. So we spend a lot of time talking to people. I mean, right now, it's very hard to have a conversation with somebody who has money, because they say, well, you're worth 30 million bucks. So if we give you 30 million bucks, we want half. And, that's not the
Yeah.
trade we want to do.
That's a
But
Shark Tank sort of
yeah, exactly.
deal.
But the conversation you do have is, you know what? Let's go find a $30 million asset, because we can compare that asset to us easily. And then we
Sure.
can put your 30 million into that. And you're welcome to be half of our company, because
Through
the
that.
money's getting used the right way. So
Yeah.
I like being in the driver's seat. I like not being desperate.
Yeah.
And the whole thing here, I go back to that, we're going to be patient for growth, but when we do something, it'll be something smart. And we go from there.
Fantastic. All right. Well, I think that's a great place to leave it. Really appreciate you being on, Bruce. Thanks everybody as well for, submitting some questions, having some fun comments in there as well. Any final thoughts, Bruce, before we wrap up?
No, I appreciate this, and I appreciate MSOS for the capital channel that it represents into the sector.
We're trying.
I think that has been an absolute boon, and I'd hate to think where we'd be without that channel. It's a capital tough business.
It is. All right. Well, thanks so much. Really appreciate it. And we'll catch you next time, Bruce.
Thank you.
Thanks.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at advisorshares.com. Please read the prospectus carefully.